Okay, we're going to go ahead and get started here for this week's webinar with Zach Strickland, our market data analyst here at FreightWaves, and myself, Brad Ganane, one of our SONAR account executives. And one thing to note before we get started here, if you have any questions on any type of functionality or any thing that we're doing, from navigating the dashboard to what different data sets mean throughout the webinar. If you don't think we've done a good job explaining it in full, please ask questions in the Q&A section there on your bar of the webinar. And with that, we are going to go ahead and get started, and we are going to have this week's focus be on our tender reject index, and more specifically how our outbound tender reject index and our inbound tender reject index can be viewed alongside of each other. What can they tell you as we navigate different geographical markets, how they'll react differently? And to get that kicked off, I'm going to kick it over to Zach Strickland.
Yes, hello. So we figured this would be a good week to kind of, since a lot of you have had some time to mess around with the SONAR platform, and we kind of wanted to rehash some of the more pertinent things and kind of address some of the feedback we've been getting about maybe getting a deeper understanding of what the TRI means and what you can do with it. So we are in the process of putting some videos up on the website, as well as more detailed descriptions of what some of these indices mean. The TRI tends to have a good bit of interest, but some of the people out there are kind of like, wow, that's really an advanced thing. And I think today the main goal is going to be to say, no, it's really not that advanced. Don't be intimidated by percentages and graphs and charts. It's actually quite simple. The first time that I looked at it, I didn't understand it right away either, because nobody's heard of a TRI before. So what we're going to do today is really kind of undress it, make sure everybody's really comfortable with what it means, what it can do, the various types of it. We're going to go through and talk about outbound and inbound and how they relate, and also kind of break apart some of the different organizational levels of it as we talk about the equipment type and length of haul. So I'm going to go ahead and just start off with the outbound tender rejection index. So again, just to kind of reiterate, the tender rejection index is the measure of the amount of loads that carriers are rejecting as shippers are tendering them to the carriers. So if there's 500 loads coming out of the Los Angeles market yesterday, then the carriers are rejecting 250 of them, we would see a tender rejection index of 50%. Today, that looks to be about 18.6%. So it's not quite that high, but what the tender rejection index does measure is the carrier's willingness to move loads in that particular area. So from an outbound tender rejections perspective, what that is telling you is the carriers are either, one, they don't have trucks in the market to cover the capacity, and two, are they actually getting a better rate somewhere else? So whenever you see sharp movements, as we've seen in the past with the Los Angeles market, it means one of those two things. And maybe there weren't enough trucks in the market in May to cover all the massive flows of freight that were coming out of it. Or maybe the carriers were just trying to get a better deal. But it was probably more of a volume surge, considering that it was gently stabilizing throughout. But anyway, the LA market does appear to be in a pretty destabilized form right now at 18.6% turndown ratio. So what I'm going to do now is show you kind of how inbound turndowns relate to outbound turndowns. So one of the kind of main patterns that we see happen with turndowns is in a traditional backhaul market. That's a market without a lot of freight coming out of it. So carriers tend to not really want to position their equipment in those areas. They tend to avoid them. So Los Angeles isn't necessarily an area that people are avoiding with freight, because there's a lot coming out of it. We did see some inbound turndowns around the first week of June when we know road check was happening. So I'm going to go ahead and pull up the iTry LAX. All right. So again, part of it is Memorial Day, but also it stayed pretty healthy throughout that first week of June before kind of recovering again. And now you see that it's kind of moving up. That's an indication that people may not have capacity to cover it, number one, but number two, it's also kind of maybe there's a reason that they're avoiding the market right now. So to kind of illustrate the backhaul scenario in a more clear market, I'm going to go ahead and pull up Seattle, which Seattle is a very seasonal market. For those of you that aren't familiar, Seattle has a apple harvest and various things coming in from the port at different times as containers flow through there. But generally, most of the year it spends itself pretty much being a freight black hole. You send your truck up there and it's really hard to get freight out of there. So right now, the outbound tender rejection index for Seattle is saying about 5% of your loads are getting rejected. So being a shipper in the Seattle market is a pretty good deal, because more than likely they're seeing rates that are quite easy to digest. Their carriers go up there with freight, and they will take just about any load that they can get coming out of it. So now I'm going to throw up the iTry, for instance, and show you guys what that relationship is. So what I've put up here now, and it's gonna put up a relational chart. And what this means is it is going to, whatever that it is, the start point is, it's going to start measuring percentage changes versus that start point. So right in the early part of the year, we go ahead and move this chart out a little bit more. So I'm going to say at the first of the year, when we started 2018, it's going to start that, they don't have to, it's not saying that they're starting at the exact same percentage of rejections. It's saying that those rejection percentages are moving percentages above or below that start point. So if they started at, a 50% OTRI, then, and it moved to a 55%, it's not going to say that it moved 5%. It's going to say it moved 10% or something to that effect. So what we're seeing here is the iTry has actually increased with greater speed than the outbound, the OTRI. So this spread here is what's important to understand. So basically, if the market was in equilibrium at the time that we started this, it is now in relative disarray, with people less willing to go into the market and more willing to leave the market. So that is the backhaul market. That is the freight imbalance situation that exists there. So the bigger the gap between these two, the more excessive the market is.
And just to chime in here, Zach, for some of our users here, what are some of the ways, or even from a numbers standpoint, I know we talk about, and we've talked about before on these webinars, monitoring the percent change, not so much the absolute value of the tender rejection percentage, but monitoring those changes. So what are, maybe from an actual change in percentage, what should our users be monitoring? What is a notable percent change in a tender rejection index on our platform?
Oh, that's a good question. There's no magic number in terms of percent change. I can't give you an absolute value for that, but because you're going to have a market such as Seattle. So if you're starting at a 5% tender rejection in Seattle, and all of a sudden it shoots up to 7%, you're going to have a big percentage change. It's going to be a 40% change. Does that mean that it's more destabilized than a market that moves from 25% to 27%? Not necessarily, but it is something worth looking at because it is a big jump. I can't give a specific number change. What I will say is this: if you look at the Outbound Tender Rejection Index for the United States, I kind of use this as my baseline for understanding what exactly the country is. Because what do you do in the financial markets? Everybody kind of judges themselves against the SPY or the industrial indices, the main guys that are moving the market, and they say, how am I performing in relationship to the spider? And that's kind of what our Outbound Tender Rejection Index in the USA is. So if your Outbound Tender Rejection Index jumps up 1% that day, and you're seeing a 10% increase in Seattle, that's something worth noting. That's kind of where I kind of step off and say, okay, this is something worth digging into. But for each individual market, there's no one answer. I hope that kind of clarifies things a little bit.
I think that's very helpful. And also, before we jump into a couple more O-try, I-try relation markets, we have one question here that I'd like to answer because it kind of from one of our users that kind of goes in line with what we're talking about, asking about tender waterfalls and how those are listed on and how they're shown on SONAR and how they're accounted for. Basically, if for example, for those who may not be familiar with that term, for a shipper that may have 5 to 10 people on their routing guide, and one tender goes through all that whole routing guide.
So you want to know basically what happens when they go through? I'm
not
sure.
Our user wants to know how is that accounted for and shown on SONAR when talking about routing guides. And I think what they're asking is basically are our numbers being affected by tenders that are being rejected? Can they be skewed? I think is what they're trying to ask.
There can be some of that, but we do have a cleanup process in there that will take some of that dirt out. It will not remove all of the waterfall situation, but it will clean up some of those tenders that are getting duplicated in our process. There's actually a few other processes in there that we use to clean up, to make sure that we're not seeing these retread type situations. Without getting into too much technical detail, there is some coding in there that our data science team has done to make sure that we don't get, if one of the shippers goes haywire one day and just blows us up with 400 or tenders that they didn't mean to send, they do clean that up. There is some stuff in there that will stop that from happening.
Okay, I think that hopefully that answers our users' questions. If not, let us know. And I think we're going to next look at maybe another market, looking at outbound tender rejections and inbound tender rejections and how they can
let's
the story that can tell us.
So one of the things that that I've noticed in the general patterns of the market itself is when capacity gets super tight, like it appears to be in the market right now, as things are moving upward really fast on the rejection indices, the corner markets tend to kind of take the brunt of it. These are the areas like I showed you in Seattle, where they don't have a lot of freight coming out of, or they're not surrounded by freight producing areas. Chicago isn't a corner market. It's kind of a hub, and it has a kind of a wheel around it, if you will, of Minneapolis, Milwaukee, Detroit's over there. I wouldn't say it's necessarily right there, but Indianapolis and St. Louis. And these markets produce these hub spokes. Dallas, another one, for instance, that not necessarily the perfect circle, but you have San Antonio, Houston, New Orleans, Shreveport, Little Rock, Oklahoma City, Tulsa, and to some extent, like up to Denver. Like these are markets that kind of create this hub and spoke network just naturally with shippers and companies having their DCs and warehouses in those areas. The areas that are kind of left out on the fringes of this. Now, LA is kind of an exception because it's on the coast and it's not necessarily surrounded by stuff as a circle, but it has California itself, and it's also the biggest port city in the country. So that keeps it pretty active. But then you have these markets like Minneapolis, for instance, which I'm going to pull up here on the iTry. So I'm going to show you guys that you see that the iTry in Minneapolis is actually quite elevated, especially as it pertains to the market itself. It's sitting up here at 31%. And as you can see, as the market has lowered its capacity, Minneapolis iTry has really kind of suffered for it because there's not much coming into Minneapolis on the west side. You got the Dakotas and the Plains, and then Canada to the north. They don't really cross the border there in Minnesota. So it's kind of left out on the edges. So these inbound, they suffer quite a bit. So there can be a lot of potential opportunity in Minneapolis. So I'm going to throw up to kind of continue on this idea of a backhaul market and how you can really identify these. I'm going to throw the outbound tender rejection index movement. So you can see it kind of actually moved towards equilibrium there in April. And that's kind of what I'm trying to illustrate with capacity in general. When markets are in equilibrium, that means there's as much going out as there is coming in, or in our instance, the willingness to go in is great as the willingness to come out, if that makes sense. So if I have no problem going into the Minneapolis market because I know there's going to be freight coming out of it. In this instance here, you can see that people are definitely not as willing to go into the Minneapolis market. And they're really, once they get in there, just like with Seattle, you see this alligator mouth right here. It's open pretty wide. So that, again, when capacity suffers, you can go to some of these like corner market cities and really see this illustrated quite in more of an exaggerated pattern. And back here in April, you can see this convergence. And again, it's gonna make a difference where you start your scale. But you can see in general, depending on where you start from, especially if you start from a point that's relative to now, like you're gonna be able to tell exactly what that market is doing in the short and near term. You see that Minneapolis kind of has its ebbs and flows, but the overall pattern is still great enough to where you can see that imbalance, especially in the short term situation. So,
and I think next we wanted to look at a market that kind of operates at more of an equilibrium, and hopefully give us some commentary as to why that may be as we pull up our outbound tender reject index of the Los Angeles X market.
So yes, so I'm going to pull up the Los Angeles market. This market should be one of those that operates at a pretty, it's going to have its ebbs and flows, but it should be pretty clear that it is a very stable market in terms of coming in and out. So again, if you see me moving my scale here, it's because I'm manipulating my start point. So the best start points are ones that basically give you a baseline. So they're the ones that are going to be the ones where the markets seem to be at the best equilibrium. If you have a lot of spikes up and down on both ends of the iTry or OTry, those are not necessarily great starting points. But as you can see, Los Angeles was kind of a weird anomaly in the way that it actually looked, it presented itself like a backhaul market in the spring, which I found to be quite interesting because LA is not necessarily a bad place to go for freight, but apparently the freight market there it just didn't get going until late or early May, when the port congestion started happening and the freight volume started coming in, and produce of stores, of course, started really popping off. People were just not as willing to go into the LA market as it went to a stabilization. I'm going to remove the iTry just to give you a good idea of what we're looking at here. So you see the LA market. It just stabilized all spring long, while the rest of the market, and I'm going to throw up the Outbound Tender Rejection Index for America to give a point of reference here. So you see the outbound for the rest of the country, Outbound Tender Rejection Index was way elevated, or it moved a lot higher than the LA market until sometime in May, in late May. You see right here, May 28th, that finally the rest of LA caught up to the rest of the market in terms of movement. And you can see that still America's still over the top of it a little bit, but LA is really kind of a market that everybody, I wouldn't say wants to go to, but the freight opportunities are there enough to make it a more appealing city than, say, Seattle or Minneapolis right now. I'm going to go ahead and throw back up I try to really drive home my point about the backhaul equilibrium market here real fast. So, yep, turn it off. Next. There we go. So as you can see, the inbound was outperforming the outbound for the majority of the year, and then they started to come together. And now you can see that they're really kind of in line. So that means that the freight is really moving in and out of that city with a fierceness. So that's not necessarily a bad thing. Maybe there's enough trucks moving into that market, but they are both going up right now, which makes me think that no, it's still experiencing quite a good bit of destabilization. It does not have an alligator mouth like you saw with the other backhauls. But if I go ahead and kind of move the scale a little bit to where the market was in less equilibrium, you can see that the outbounds are exceeding the inbounds still in terms of movement, which means that it is still somewhat a desirable market to go into and get freight out of. But the overall market is having an impact here. Okay.
And we're going to pause really quick. We've got a couple questions that we're going to address here.
Okay.
And our first one,
go for it,
is
all right. Tender rejection data will over large carriers and depends on appropriate running. Okay, so the question is basically regarding how large carriers may skew this data. So that's a pretty solid point. I've heard it quite a bit, and that's true. It does have a big impact. But the thing about the tender rejections is there's nobody that has more than 2% of the overall market. The market is so incredibly fragmented that even the Knight Swifts of the world cannot give you a big picture of what is happening out there. I used to work at a company, and I used to wonder, and I would always look at the year-over-year numbers and wonder what exactly is going on in the rest of the world. Like, are we outperforming it? Are we underperforming it? And I'd have no idea. I'm telling you, there's enough data in here to give you enough picture of the overall market in general. Like it is much bigger than Knight Swift and Schneider. Yes, they're going to have some localized impacts in this type situation, and I'm not saying specifically those companies are, because the data is entirely anonymized. We have no idea who the carriers are, but we do know that we have enough sample to where a lot of those are smoothed out. You should not see that significant of an impact. And over time, obviously, all of that gets ironed out. And again, these larger carriers, they're part of the overall market. So you kind of want to know what they're up to as well. Like if one of these bigger carriers are showing spikes in volume, that impacts the entire capacity. That's all interconnected. These networks, if you know, a big carrier is covering a bunch of loads in Chicago, and they can't cover all of them, and so they bounce through the routing guide, that's going to spill over into all the smaller guys. Like that, they're all connected. I'm saying that the capacity at this point in this freight market is very fragile. So everybody, it affects everyone is what I'm saying. Hope that answered enough of the question.
I think it did. If you need that, the user that asked that question, if you need it explained in any further detail, please let us know, and we can address it either further on here or outside of the webinar. And we have one more question that I'd like to grab before we go on to our next portion. Are there any plans to make this available for analysis? Whoops, sorry, I got a little bit ahead of myself. Are we able to show differences in different indexes plotted? Example, the outbound tender reject index for LA versus the inbound tender reject index for LA, rather than just plotting them both on a chart.
I'm sorry, I didn't let's see. Do you have any plans to allow showing difference in different index plotted rather than just plotting both? So I think the question is basically asking if we're going to be able to see the difference between indices and an absolute value. And yes, that actually is coming on board here. I'm pretty sure it's happening in the next week or two. Instead of looking at it on a relational standpoint, like you see here with the inbound tender rejection index and the outbound. So these are tracking percentage changes. You will be able to put the inbound tender rejection index on there and see that it's operating at a 16%. And then you'll have the outbound sitting on top of it at 18%. And you'll be able to see those exact differences. And there actually are some tools up here that will help you kind of measure that, and don't get intimidated by some of these tools. I'm going to show you guys a real simple one to kind of show you that this tool right here that I'm using, and I went into just to slow down and back up a little bit, I went into the draw tool and I went down here to pick the Trendline tool. And all this is going to do, it's going to allow you to easily measure the difference between 2 points on this chart. So you see I clicked up here at this top edge point and I moved it all the way down here to see what is my difference between these two. So it's showing that it moves 37.5% between those 2 points, and you can quickly see, and it'll just label it for you. So it's basically just giving you an easy way where you don't have to go here and type out the math. I'm going to remove that because I know it can be a little confusing here. And one of the big, once we do get that absolute value tool on here, you'll be able to use stuff like this to really kind of click on here and see, okay, here's my difference between these 2 points. So it's moved 320 basis points between these 2 points, or 15.7%. And you see that 2-bar thing there, that's 2 days. So whatever the unit of measure is here on the y-axis there, or x-axis, I'm sorry, they will move that unit of measure. So these are days down here. But anyway, I hope that answers your question. There is going to be a time where you can subtract the two against each other on the same chart. You don't have to, go to some sort of calculator and do it. The tool will do it itself. And hopefully that got that question out of the way. Again, if you want to talk offline or have any other discussions, please let us know.
Yeah, and along with that one, really quick, I'll just address, we do have the ability with the SONAR platform for API plugins, add-ins. This platform does have API capabilities. And again, if you're interested, we can address offline. With that, I'm going to go into this following question, which actually takes us into the next portion that we were going to go into anyways. Is there a quick way to view each day what are the top 5 or 10 markets for both inbound and outbound that have the highest rejection rate? Or do you have to view each market individually to get that data. And I think a good way, and kind of segues us into what we're going to show our users how to do next, is the watch list. And with that, as we create this watch list, it brings us a blank screen as we create it under our My Pages section on the bottom left under Edit Pages and Create Page. And once we get into the watch list, you'll have the ability to add as many.
Oh, sorry, I messed that up.
Okay. You can add as many different acronyms or data sets you'd like. So for the question's sake, we have the ability to add these 5 or 10 major markets, or even the markets that you're most interested in, more specifically. And as you can see, Zach adding these in here by their acronym. For the Outbound Tender Rejection Index, the OTRI, then with a period, and then the city acronym. And if we save that, we'll be able to display those indexes, and we'll be able to see the percentage and the value there, and kind of give you a kind of a high level overview of what's happening specifically in each of these markets.
We are going to add the change in here, where you will be able to see the day over day eventually. So you'll be able to tag your favorite markets. I believe the ones that I have listed here are probably some of the most important in freight markets. In terms of seeing that kind of, if there will be something in the future that will allow you to be notified of dramatic changes, alert functions. That way you will not have to click on each individual market. I think some of that, I mean, again, that's off in the future a little ways right now, but that is coming. That way that for those of you that don't want to go through and click individual markets, they will be able to receive alerts through the screens, and you can tag certain markets, certainly like we did here in the watch list. Something to note, if while we're waiting on this change to come online, like I said, look at the Outbound Tender Rejection Index for the country. And I forgot to put it on here, but we can add that real fast. And again, the Outbound Tender Rejection Index is kind of the baseline, because it's probably the easiest to understand from a freight perspective. Inbound is kind of a general sentiment on a general area, like on what's going to happen next. Outbound is kind of more immediate. So the outbound index is, do I have capacity sitting there right now? We kind of know the shippers and commodity flows in certain regions. So we have more information to kind of relate to what outbound is. But inbound can be a fantastic feature about how to manage if you're in an outbound market that isn't necessarily a hot one, or maybe it is a hot one, and you can kind of see what people are their general attitudes are towards your individual markets. So what I've done is I pulled up the Outbound Tender Rejection Index for America, and you can kind of see some of these markets as it relates to it. So Los Angeles is still pretty favorable in relation to America in general. That's good to know, but these others are kind of hovering right around it, and even the Atlanta and Chicago markets are over it right now. So again, you can almost tell where people are having trouble covering freight as it's probably surging in those two areas. What'd you do?
Oh, and then
you can click on the you can click on the chart next to it to get your chart to show up right next to it if you want to expand on that at all.
And then another way as well that we could give you kind of see a high level overview to stick along that question that we received is through the map, the heat map, which we haven't talked a lot about on this specific webinar. But as you see here, our heat map, which is showing based on the darker color, is, since we're talking outbound tender rejection index here, we'll be showing areas, or in the inbound tender rejection index, areas with the higher percentage. The darker colors are going to be the regions with the higher value that you're looking at. So this is another way to view kind of on a big scale what's happening across the country and what regions are responding different. And we've, since last week, added the reefer tender reject index as well. And actually yesterday we added the van tender reject index as well. So breaking these rejection indexes out by equipment as well. And of course, if you zoom in on this map function and hover over any of these regions, you do have the ability to view not only the index that you have listed or selected in the top right, but actually every data set that is available for that region of the country that you are looking at.
Yeah, and I think that's a good point. And that was going to be something we were going to try to hit on today. And we've kind of run a little long on that first part, but those are really, I think that was a lot of valuable stuff in terms of question and answer. So I'm going to try to hit on this real fast, but we do have different organizational levels of the tender rejection indices. And like you said, we just added the van tender rejection index as well. We've had the reefer and flatbed also, but this gives you the full picture of what is going into the outbound tender rejection index. So if you added up the van, flatbed, and reefer rejection indices together, not actually, but the total, like that would be the same. That's the same amount of rejections to load requests that you have in the outbound tender rejection index. So it's just another way of slicing that pie, if you will. So all three of those are kind of organized as the equipment type tender rejection indices. Obviously, the largest portion of that is the van, because that's what the majority of the freight in the country moves under is van. Then the second would be reefer, and then flatbed would come in there in the third place. But all of those together kind of give you an idea, and I'll go ahead and go back to the chart. So one of the big things that happens every year, and especially in the produce season, is the Los Angeles market experiences these surges. So I'm going to go ahead and use the reefer, the R-Tri, if you will, to illustrate kind of a portion of the LA market. So you see that the reefer rejection index has gone up quite a bit. So that explains a good piece of that 18% market, meaning that you still have a lot of produce probably coming off the coast there. That's a part of it. And so if we went in here and looked at the V-Tri LAX, we would see that vans are actually seeing a slight recovery, still elevated, but again, moving a little bit differently. So you're starting to get a better picture of what's happening in the LA market in general. Now, right now, the flatbeds, there just aren't enough flatbeds in the majority of the country to have a flatbed tender rejection index in every market. So right now it is straight American flatbed tender rejection index. But that's just another form of the tender rejection indices. And then after that, we have the length of haul rejection indices, if you want to chime in there, and I'll get it set up.
Again, along the lines with the flatbed index, right now only available in the overall U.S. Percentage for the rejection index. We do have length of haul broken out into several different categories. Starting off here, what Zach is showing, the local tender reject index, which we are showing all tenders being rejected under 100 miles. And I think Zach would like to kind of give you a little idea of what that number can tell you from a U.S. standpoint.
So effectively, these length of haul indices, they're basically giving you, again, a kind of a broader market overall, like in terms of the United States, what's happening in the general country. So you can see that right here, the local tender rejection index, C-Tri, which is generally one that people don't turn down with a lot of frequency for whatever reason. The local hauls tend to be a little bit more favorable. Drivers are kind of bridging the gap between cities and markets. These are obviously also a little bit more prevalent in some of these areas as they move between local regional spoken hub networks. You have, warehouses moving to retail stores and stuff like that that are more regionalized. That's a big thing nowadays, with last mile becoming more and more prevalent as people are opening regional warehouse hubs over in places where markets need to have a little bit faster service, the Amazon effect, if you will. So as people are moving to this more regionalized, as transportation costs get higher, especially for over the road. I mean, fuel costs are obviously a big deal, but checking on these individual length of haul markets and in general is a good idea, just to kind of get a feel for what's happening in the broader market. Amazon effect obviously is in full swing. People want their Amazon Prime goods. People need to position their warehouses. I think Home Depot is spending billions of dollars redoing their supply chain network just to make sure that they can service all of the needs as they come up. So again, this is kind of a market analysis. I'm going to go ahead and just pull up the other extreme of this, the long haul, which is anything that's over 800 miles. So again, there's definitions of all of these indices on the SONAR website. It'll give you a breakdown by which type, like what they mean, what's useful about it. We're in the process of uploading some videos that will make this, you guys can go reference it whenever you want. There's also going to be written out articles and things of that nature that will take these deeper dives. But if you want to go and figure out what each network is, or which indice with which mileage bands they're in, go check out that page. The city try, or the local try that I showed you before, was under 100 miles. We have a short haul try, a mid haul, and a tweener try. And it goes 101 to 250. 251 to 450, and 451 to 800 in that order. And again, long haul tender rejection index is 800 miles plus. You can see here that people are a little bit more willing to take the long haul trek than they would be like the general market. So that's an interesting number to look at and monitor to see just how, as over the road drivers kind of exit the market, this number may have a creeping effect as less drivers are willing to go across the country. But again, with less need for that, as people build warehouses and DCs and regional networks, this need may dwindle a little bit too. But again, these are more broader economic indicators. They're not necessarily something that is going to give you real pointed information in terms of lanes right now.
Sure. And we're getting close here to the end of the hour, so I'd like to take this last 10 or 15 minutes. We're, of course, open for questioning to go over quick some of our indices that are new and that we're adding over the next month. Some intermodal data, which I know we've had some requests for. By railroad, by total carloads, also some USDA data, which I know we've relayed a few times. That's almost ready for the platform here. We do have, as we answered earlier, the API capabilities, and those will be fully able to be accessed at the end of this week, early next week, and the spec sheets are available as well for those interested in discussing or learning more about that. And also if you want to talk about our Turndown Rejection Index Delta, which actually
yes,
we should have brought that up when that question was asked.
Yeah, this is coming up in the next couple of weeks, where we're going to add, and this is going to be like a train of add-ons. So we're going to start adding more and more functionality to this site. Like, a lot of this stuff is really exciting. Like, I know I was, from my perspective, from a commodity flow perspective, the USDA stuff is really, really kind of interesting to me to look at. That has a lot of impact on freight markets, but specifically as it turns to the Tri-Delta. So this is going to be an index that kind of measures the changes in turndowns. So for the person that asked that question, I should have mentioned this earlier. It's going to give you a different range of timescales so you can go out and see who's changed how much over the past week, the past month, and eventually the past year even. And so you'll be able to see and which markets had the biggest changes, for instance, and that'll be incredibly useful. I think did you covered the BLS and
no, actually, okay. If you want to talk about that.
So yeah, so we're also this week adding the BLS data, which is employment information, and it's right now it's specific to transportation, and it does break it down into trucking. Employment surveys that they do, we'll update it, and you'll be able to know kind of what's happening in the trucking market in terms of employment, which is a lot of people know that's a pretty hot button topic right now with drivers entering and exiting the market, but it'll also have some shipping and other segments in there as well.
Absolutely. And as stay tuned, updates are coming out, and of course we'll be communicating how to analyze them as well and to view them on SONAR. And with that, I think we're going to end the last 10 minutes here for kind of those newer users to just give you a quick 101 session, and of course ask any questions via the Q&A section that you may have while this is happening, and we can address those questions as we go through. So I'm just going to start us here at our main landing dashboard, which is currently set as the truck transportation employment seasonally adjusted USA is our landing page right now. So as you saw, Zach and I navigate through a lot of the indices that we showed. We were working off of my pages because anything up in this default page section, whether it be dashboard, chart, map, or watch list, as we scroll through here, or even our different news tickers, you don't have the ability to go in and change. So all of these views are completely customizable. So whether it be, again, our watch list, map, or charts, or news sections. So when we want to go in and create our own page or our own customized charts or what you may have, we want to go in this bottom left-hand section to edit pages. And you'll see that pop-up screen. We have the ability, some of you may not have anything here under my pages. By this arrow, you can drag and change the order that they're listed in. But for this case, we're just going to show the add page section. So we're going to name our page quickly. We'll name it after our market analyst, Zach. We're going to click add to that page. That's going to boot us back to one of our default pages. So you're going to want to go back into my pages and click on the page you just created. And then you will see this blank screen. And from there, now you have the ability to change and to add what you'd like in the bottom right-hand corner with that plus sign. So when you click on the plus sign, you'll have the ability to add any of the widgets that you would like to, be it news, charting function, watch list, or a map. And we have the ability, or you have the ability, to add any number that you would like to go alongside that. So if we would like to add one chart and we would like to just go along the lines with the things that we discussed in the webinar, and we're going to look up our outbound tender rejection index. We're going to type in that acronym, OTRI, then that put a period, and USA is going to be what comes up for that specific market. One trick or shortcut, I should say, that I like to give our users when first navigating and you're not very familiar with any of the acronyms that we have listed on this platform is to just type in what you're looking for. So if I'm looking for USA overall data and I type in USA, I can view all of the data sets that are available for what I typed in. If I'm interested in the inbound tender rejection index for Chicago, but I can't remember what exactly that acronym is, if I type in Chicago, then it will list here all of the data sets for Chicago. So if I want to click on inbound, then of course I can click on the inbound tender rejection index there. And then from there, once you're in this chart function, you have the ability to do multiple things. As I'm sure you saw Zach show us the compare function here right below the ticker name or the data set name. We have the ability that same search symbol will pop up. And again, an easy way to, maybe you want to look at Minneapolis. I start typing in Minneapolis and you'd like to compare, let's say, outbound. So typing in the city, again, will show all of the available data sets for that region or that X market, if you will. And then within the chart function here, you have the ability to really do as much or as little as you would like. We have a bunch of different tools here on this top line bar. As you saw, this draw button, I think Zach used it one time, brings us to a drop-down screen under select tool. Maybe you'd like to throw in a call out here, which you can do, and maybe type in an event that happened that you'd like to note. And again, these are your custom pages, so you can save these. If you'd always like to look at and compare, it looks like we're comparing inbound rejection index to Chicago and outbound of Minneapolis. So if you save these views, then you'll have the ability to kind of look back and see what's happened and you know, type in the events that happened there. And also in that function, there's, I mean, a number of things here that you can play with. This doodle line that you can draw, and any of these that you would like to trash, you just right click on them and you can get rid of them. And along the lines of different things you can do once you're in the chart function, we have our info button, which will show the price as you hover across your chart. So as you see in this, it pops up above the name of the graph. You'll be able to see what that value is as you see it changing as I move my pointer across the graph. We also have our crosshair function, which is probably the most popular one to pinpoint the exact value that you're looking at as you move across. Then we have our studies that you can do. You can run moving average lines, a very popular one to see kind of what the average of the time frame you're looking at from a tender rejection index standpoint. That's probably the most popular one in that set. And then of course, moving over in our display, most of the views you're seeing are in our default. In our mountain, you can change it up to a baseline, which is showing you the absolute of the time period you're looking at. So if the time period we're looking at started May 23rd, it looks like, and our value was 27.48% tender rejections. If that value or if that tender rejection percentage goes below that number, then we'll see this red graph. So it's a different way to view some of the data. And again, you can play with any number of these and change them. And if you don't like them, don't save them. If you do, you can save them. So let's say I do like this baseline, and I also would like to have, I'm gonna go back down to my widget, and I'd like to add a map there as well of, let's say, my reefer tender reject index. And I really like how I've got this page set up and I want to keep it. So I'm going to go back to my edit pages in the bottom left, and I'm going to save the changes that I made to this page named Zach. So then if I jump from this page and go somewhere else, that every time I click on this Zach page, I'll be able to see what I originally wanted to. And again, you can make any changes at any time by the plus button down here in the bottom right hand corner, and you can add any number of charts or different widgets that you'd like along the line of being customizable. I'm going to delete my chart and my map function here and just show you quick as well how you can also customize our news feed, pretty similar to the watch list. You just go here under this little pencil, the edit button, and you can go in here and click on the different news feeds that you would like to see or like to keep track of. And these are all exportable kind of current event tickers. So if you see anything that you like that interests you, click on it, it will take you to that web page. And the rounding out, which I know we touched on already, is I'll show you our watch list as I go here in our little widget spot here in the bottom right hand corner, the plus sign, and I add a watch list. And again, kind of similar to when we originally created our first page, it's going to bring you a blank screen. You're going to want to go from there to the edit button. And again, as we saw earlier, Zach do, we can pull up and show any number of indices we'd like to see. Again, make sure you press add so you get them in there to save. And then once you have any number of data sets that you like and you feel comfortable with, again, adding them, we can save them and view them from the watch list. And that is going to round out. I don't think we have any questions to finish up here. We'll leave it open for a few minutes for questions just in case. And just a last reminder here, under your name in the top right corner, when you log in, you have the ability to contact myself and my team under this contact us email, which will bring you to the screen. You can type in your email and tell us, what you'd like to know, any questions you may have, and also our knowledge center. If there's a lot of other third-party data sets and other indices that we have that we didn't go over in this webinar that are available, and if you click on this knowledge center link, you will be exported to see all of the data that we have available in SONAR. You'll see how we collect it, how often it's being displayed, and also you'll have a index for the tickers or the acronyms of the different data sets. Again, don't forget, an easy way to find any data set that you would like is just type in the city of the X market region that data is located. And with that, we're going to leave it open for a few minutes here for questions if anyone has any final questions. If not, thank you for joining us today.